Hey, welcome back to the channel. In this video, we'll be talking about a very pertinent question that someone asked me in a session I was conducting at a company. What is more important, emergency fund or insurance? So this person from the audience said, Ashish sir, I have heard that we should have an emergency fund and we should have insurance as well. I have a limited salary and I know I have to have both. But which one should I have first? I can't afford to have both at the same time. Well, honestly, it was for the first time I was confronted with such a question. But I guess it is equally relevant for many investors, especially for beginners or who have limited salaries. But before I go about explaining which one should be preferred over the, I would like to share my views on why we need an emergency fund or why do we need insurance. Emergency funds are savings set aside to cover unexpected expenses that can catch you off the guard. Think of it as a financial safety net for your life surprises. For example, what if your mobile phone gets lost or your laptop suddenly breaks down? You might even face a sudden job loss. These are situations that you can't plan for, but they can happen at any point in time. Insurance, on the other hand, is there to help you with certain big and specific kind of expenses like medical bill, car accidents, or damage to your home. For example, health insurance can cover hospitalization costs, and car insurance helps you if your car gets damaged. But insurance does not cover everything. It won't pay for things like a broken laptop or a lost phone, or if you have a sudden job loss. That's why your emergency fund is so very important. It helps you with things insurance won't cover. So you don't have to worry about when unexpected expenses pops up. So my suggestion would be to build an emergency fund first because it's easier to build and can cover for all emergencies, including the ones that insurance policies cover too. You can start building your emergency fund by setting up a simple SIP in a liquid or a short-term fund. These are safe options that let you easily access your money when you need it. Another easy way to grow your emergency fund is by parking any extra money you get, whether it's in the form of some bonus or some side income. The key is to keep adding bit by bit. Ideally, your emergency fund should be equivalent to 6 months of your expenses, but it can vary from person to person depending on his or her situation. The key thing is to remember that your emergency fund should be easily accessible and should be free from market-related risk. Putting your money in a liquid fund or a short-term fund ensures you can get to it quickly whenever you need it. Unfortunately, many people treat their equity investments like an emergency fund, which is not a good idea. But we will save that discussion for some other day. Now, when you can, it's important to get right insurance policies too. Speaking of insurance, let's first talk about which type of insurance policies one must have. There are many kinds of insurances out there, but not all of them are necessary for everyone. To start with, a breadwinner must have these insurances policies for sure: accidental insurance, term insurance, medical or health insurance. Accidental policies primarily covers accidental disability and death. Term insurance covers death and medical insurance covers hospitalization. In my view, an accidental policy should be first thing a breadwinner must get. Right now, you might be the one who's bringing money and supporting your family. But if something happens and you get disabled, you could end up being a financial burden. And that's not just tough for you, it's tough for your whole family. Next in line of priority could be anything medical or term insurance. If your employer has any of the policies for you, then the priority should be what is not covered. To sum it up, having both an emergency fund and insurance is essential. But if you are just starting out and can't do both at the same time, focus on building your emergency fund first. It's a quick way to protect yourself while you save for insurance. Remember, managing your finances is a marathon, not a sprint. Take it step at a time. If you found this video helpful, hit the like button and subscribe for more content like this. And feel free to share your thoughts or questions in the comment section below. I would love to hear what you think, and I'll see you in the next one. Take care and stay safe.